This program is brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say at PennyMac, greatness lives here.
Welcome to The Interest. I'm Mike Savino. A silver lining with housing prices skyrocketing is that homeowners have seen the values of their homes also go up. That in turn gives them more equity should they need it. Well, as home price growth has leveled off, so too has the rise in home values. In fact, values dropped for the second straight month as mortgage rates continue to push buyers out of the market. According to Zillow, home values in August fell by 0.3% from the prior month, and the average value is now $356,000. That's even steeper than the 0.1% drop we saw in July. But even with the decline, home values are still way up thanks to a spike earlier this year. The average value is 14% higher than last year and nearly 44% above August of 2019. Now, values are dropping because buyers are being priced out of the market. With the 30-year fix now over 6%, the average monthly mortgage payment is 83% higher than it was in August of 2019. We are seeing competition for lower-priced homes, and areas with lower home values are still experiencing appreciation. In fact, 12 of the top 50 markets saw home values grow, led by Birmingham, Indianapolis, Cincinnati, and Louisville. The one thing those metros have in common, they all have an average home value below $300,000. This lack of sales also continues to push down home builder confidence. The NAHB's confidence index fell 3 points this month, now down to 46. The survey asks builders to say whether they have a good, fair, or poor view of the market, and any number below 50 means more builders have a view that is poor than good. This is the lowest mark since the spring of 2020, but prior to that, you have to go all the way back to May of 2014. And now 1 in 4 builders reported dropping their price. That's up from 19% just last month. Coming up, the former head of Wholesale at AmeriSave talks about whether he thinks the exodus from the channel is over.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
Welcome back. Wholesale has taken quite the beating lately, with multi-channel lenders like AmeriSave and loanDepot shuttering their wholesale divisions. Our own Christine Stewart talked with Michael Brenning, the former president and founder of AmeriSave's wholesale division, about what's next for the channel and what impact the pricing war will have on the broker community.
I think the honest reality is the broker community is going to be negatively affected by companies like loanDepot and AmeriSave getting out of wholesale.
Michael Brenning, the former president and founder of AmeriSave's wholesale division, says companies are reverting back to what they know with the market down 50%. But does that mean that retail and correspondent are better?
If I was building a new lender right now, I'd build a multi-channel lender. I wouldn't be reliant on one channel and one channel alone.
Wholesale has taken quite the beating lately, with lenders like AmeriSave and loanDepot shuttering their wholesale divisions. But there have been a number of upstarts over the past year trying to get into the channel.
And I fear that a super majority of those new upstarts are going to get crushed and have to exit, and their capital is going to be bled. And
what about the pricing war between Rocket Mortgage TPO and United Wholesale Mortgage?
Competition's one thing, and that's called capitalism, right? It's okay to compete with each other, but when you stoop to some of the levels that we've seen certain entities stoop to, both publicly and privately, it's not good, for anybody. I mean, the true superpower of a broker is what, Christine? It's choice. Right. Like that's what they bring to the consumer. That's what they bring to real estate agents.
Brenning says that the price war between the biggest entities puts that in jeopardy.
When you take away choice, which is really what this pricing war is going to do and already has done, it's taken away loanDepot, it's taken away AmeriSave, it's taken away GoPoint, it's taken away Stearns, it's taken away, the casualty list is brewing, right? We don't see other names out there yet, but for sure they're out there.
But what's a broker to do at the moment?
It's tough right now because you got a market that's down 50%, so you need rate and price right now to compete and try and win every deal you can. So if you choose not to engage with one of these 3 or 4 lenders that are participating in the pricing war, you're putting yourself and your customer at a disadvantage, and you're likely losing that deal to somebody else that's working with one of the 4.
Brenning says that brokers need to be worried about the long term.
I think they should be worried, right? I don't know that many are thinking that way right now, but there's going to be a purchase season next year. There's going to be an environment where there's not a price war going on next summer because nobody can sustain it.
For the Mortgage News Network, I'm Christine Stewart.
You can hear more from Brenning in today's episode of The Principal, our daily news podcast. We'll be right back after a word from our sponsor.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.